All right, welcome everyone to another deep dive. We love to just really get into the nitty-gritty of these financial happenings. And today, oh boy, do we have a doozy for you. March 4th, 2025.
Yeah.
Not a fun day on Wall Street. Not fun at all.
Not fun at all, no.
Yeah, so we've got this great article from investing.com aptly titled NASDAQ, S&P 500, and Russell 2000 Test Critical Lows.
Yeah.
So, I mean, right off the bat, we're not dealing with a minor dip here.
No, not at all.
So our mission today, if you choose to accept it, listeners, is to really unpack this whole mess, what went down, why it matters, and maybe even try to peek into the future a little bit, see what might be coming next.
Yeah, and I think it's important to emphasize right from the get-go that this wasn't, your typical little blip on the radar. This was a full-on sell-off across the board. We're talking the NASDAQ, the S&P 500, even the Dow Jones, which, usually feels a little bit more steady Eddie.
Old reliable.
Yeah, exactly. But even that one took a hit. But the one that really stood out to me, the one that really got hammered, was the Russell 2000.
Yeah, and that's interesting because the Russell 2000 that tracks those smaller companies, right? So a lot of people watch that as kind of a gauge for the overall health of the market. And
yeah, it's kind of like the canary in the coal mine a little bit. It's more sensitive to those broader economic trends.
So this article was using some pretty strong language talking about these critical lows, and I gotta admit, I was sweating a little bit reading this, but we've seen dips before, right? I mean, the market goes up, the market goes down. What makes this one so different? What makes this one so scary?
Well, I think the thing that's particularly worrisome here is what's called the undercut of Friday's lows.
Okay, undercut sounds kind of ominous.
It basically what it means is that the sellers are really, really digging in their heels. They're pushing those prices down even further than they were on Friday. So it's not just a pause in the downward trend. It's an acceleration of that trend.
So like if you're trying to hold a beach ball underwater, you let up a little bit, it's going to pop back up. But in this case, it's like somebody's pushing that beach ball even further down.
They're sitting on it. They're adding weights to it.
Yeah, not good. Not good. So, all right, let's break this down a little bit. The Russell 2000 we talked about, it tanked. What exactly is that telling us? What can we glean from that?
Well, one of the key things to look at is the 200-day moving average. That's a common technical indicator that tracks the average closing price over the past 200 days.
Yeah, that's a metric that a lot of people pay attention to for sure.
Right. And when an index drops below that line, it can be a sign that the bears, the people who are betting on a market decline, are starting to gain the upper hand.
Okay, so that's one red flag. And the article also mentions something called the January swing low, which sounds like something you might do at a jazz club.
Yeah, I guess it does.
But in this context, what are we talking about?
So a swing low is essentially the lowest point that an index hits within a specific period, and in this case, we're talking about January. So the fact that the Russell 2000 has dropped below that January swing low suggests that downward momentum is really picking up steam. Yeah, and the article even goes so far as to predict that it could drop to a level of 200.
Wow, that's a big drop.
It is.
Yeah, so the Russell 2000 definitely flashing some warning signs. But what about those bigger players like the S&P 500 and the NASDAQ? Are they holding up any better? Are they showing signs of weakness too?
Unfortunately, they're not immune. The S&P 500, which is, represents a much broader slice of the market, lost all of its gains from Friday, and now it's dangerously close to its own 200-day moving average. So that's another warning sign.
And the NASDAQ is always, we think of tech as being so resilient. Are they sweating a little bit here?
Even the tech giants are feeling the pressure. The NASDAQ had some promising signs early on, but it's struggling to hold on to its 200-day moving average. And if we zoom in a little bit, the semiconductor index, which is a key part of that tech landscape that dropped 4%, it's now on track to test its September low, which is around 4,500. So yeah, even the tech sector is feeling the heat.
Not good. Not good.
Yeah.
All right. So
not a fun day.
Not a fun day on Wall Street. So
right.
I think we need to take a little break, gather our thoughts, regroup, and then we'll come back and we'll dive even deeper into what all this means.
Sounds good.
All right, we'll be right back. All right, so it feels like no sector was really spared from this this bloodbath on Wall Street.
Yeah.
We've got the Russell 2000 just in a free fall, the S&P 500's teetering on the edge, and even the mighty NASDAQ showing some cracks. I'm starting to think I need a helmet just to follow along with all this. But before we completely descend into market panic, was there any glimmer of hope at all in all this?
Well, initially it seemed like the Dow Jones, that kind of bastion of American industry, that it was holding its own. It even showed what's called a bullish engulfing pattern from the previous Friday.
Okay, a bullish engulfing pattern. That sounds, I don't know, maybe a little bit optimistic.
Yeah, it does sound a little bit more hopeful, doesn't it?
It does. It does. So break it down for us. What does that even mean, a bullish engulfing pattern?
So if you imagine like a candlestick chart, those red and green bars that represent price movements,
Yep.
a bullish engulfing pattern happens when a green candle, representing an upward price move, completely engulfs the previous day's red candle, which is a downward move. So it's
Yep.
a sign that the buyers are really stepping in with force, and it could potentially signal, a reversal of that downward trend.
So a little bit of a
Huh.
beacon of hope in a sea of red.
Yeah, a little bit.
But I have a feeling you're about to tell me that even that beacon, fizzled out.
Yeah, you're right. Unfortunately, even the Dow couldn't escape the overall market gloom. It lost that bullish momentum, and now it's also heading toward its 200-day moving average, kind of joining the ranks of its struggling counterparts.
Oh, man. So it really was, just kind of bad news all around.
Mm.
Okay, so we've established it was a rough day for the market. But what does it all mean, for our listener who might be, checking their portfolio right now and feeling a little knot in their stomach? Help us understand. Is this just a temporary blip, or are we heading into something a little bit more serious?
That's the million-dollar question, isn't it? And this is where things get really interesting. So the article included a chart showing investor sentiment. And well, it's not a pretty picture.
Uh-oh.
It indicates that sentiment is leaning heavily bearish, meaning a majority of investors are anticipating, further decline in the market.
So not only are the indices themselves looking kind of bleak, but the very people who are, driving the market are feeling pessimistic too. That sounds like a recipe for a downward spiral.
Yeah, fear and uncertainty are really powerful forces in the market. And when those emotions take hold, it can create kind of a self-fulfilling prophecy. People start selling, prices drop further, and suddenly everybody's panicking.
All right, so let's put this in context for our listener who might be thinking, okay, bearish sentiment, declining indices, but, what does this mean for me? We've all heard these whispers of a bear market. Break it down for us. What exactly is a bear market, and are we looking at one right now?
Yeah, so a bear market is typically defined as, a prolonged period of declining stock prices, usually a drop of 20% or more from recent highs. And it's often accompanied by, widespread pessimism and a sense that the economy is slowing down.
So not just a dip, but like a sustained, downturn. Okay, and if we look back historically, what usually triggers a bear market? Is it just this investor sentiment, or are there other factors at play?
Investor sentiment definitely plays a role, but it's usually a combination of things. We could be looking at rising interest rates, high inflation, geopolitical instability, or even just kind of a general loss of confidence in the economy.
And I imagine that feeling of pessimism can really snowball, right? People see the market dropping, they hear, news about economic uncertainty, and they start to pull back on spending, which, further weakens the economy.
Yeah, it becomes a vicious cycle.
So if we're, potentially on the cusp of a bear market,
Yeah.
what does that mean for our listener who's, invested in the market? What are some steps they can take to kind of weather the storm?
Well, first and foremost, don't panic. Bear markets are a natural part of the economic cycle. They've happened before, they'll happen again. The key is to not make rash decisions based on fear.
Okay, so no selling everything in a frenzy. What about the opposite? Is a bear market a good time to buy? Because, prices are lower. It seems like a good time to get a deal.
Well, it depends on your risk tolerance and your investment goals.
Yeah.
A bear market can present opportunities to buy stocks at a discount, but it also comes with significant risk. So it's crucial to do your research and understand the companies you're investing in.
So it sounds like navigating a bear market is kind of a delicate dance. You need to be cautious, but also, maybe see it as a chance to grab some bargains.
Yeah.
But for a listener who might be, feeling a little bit overwhelmed by all this talk of market doom and gloom, what's the one key takeaway you want them to remember?
I think the most important thing is to stay informed and really focus on the long game. The market is constantly fluctuating. Short-term dips are inevitable. They're going to happen. Don't let fear kind of dictate your decisions. Instead, focus on your long-term investment goals and make adjustments to your strategy as needed.
Yeah, that makes sense. It's easy to get caught up in those day-to-day headlines, but sometimes you need to, zoom out, look at the bigger picture, and remember that this is a marathon, not a sprint. Now, our article from investing.com, it focuses a lot on these technical indicators, these,
Mm.
these metrics and charts and stuff. But
Yeah.
I'm curious, what role does psychology play in a bear market? I mean, you talked about fear and uncertainty, but are there other emotions at play that our listeners should be aware of?
Oh, absolutely. Psychology plays a huge role in how the market behaves. I mean, think about it. The market is ultimately driven by the decisions of millions of individual investors, each with their own, hopes and fears and biases. And in a bear market, those emotions can become really amplified.
Yeah. So not always,
Yeah.
perfectly rational decision-making
Thanks,
happening.
Dick. No, not at all. We see things like herd mentality where people start panicking and selling simply because everyone else is doing it. There's also something called anchoring bias, where investors get fixated on a particular price point, like a stock's previous high, and they really struggle to adjust their expectations as the market changes.
So they're kind of holding on to that memory of, what the stock used to be worth, even though the reality is very different.
Exactly, and that can lead them to hold on to losing investments for way too long, hoping for a rebound that may never come.
It sounds like understanding these psychological traps is almost as important as, understanding those technical indicators.
Yeah, I think being aware of your own emotional biases can help you make more rational decisions even when the market is, feeling chaotic and crazy.
Okay, so we've talked a lot about the downsides of a bear market, but you mentioned earlier that there can also be opportunities. This might sound counterintuitive to some, but can you elaborate on that? How can a period of decline actually be advantageous for certain investors?
Well, remember that basic principle of investing buy low, sell high. A bear market with its lower prices presents a chance to buy quality stocks at a discount. Of course, it's crucial to be selective, focus on companies with strong fundamentals and long-term growth potential.
So it's not just about blindly buying everything that's on sale. It's about doing your research and finding those hidden gems that might be undervalued by the market.
Precisely. It requires research patience and a bit of a contrarian mindset, going against that prevailing sentiment of fear and pessimism.
This makes me think about those contrarian investors. I've always been fascinated by them. Are they just, daredevils with a high-risk tolerance, or is there a method to their madness?
There's definitely a method. Contrarian investors often go against the grain. They're looking for opportunities that others might be overlooking. They kind of thrive on identifying undervalued assets or sectors that have been unfairly punished by the market.
So while everyone else is running for the exits, they're calmly walking in looking for bargains.
Yeah, you could say that. But it's not just about being contrarian for the sake of it. These investors, they do their due diligence. They research companies. They analyze market trends. They're looking for evidence that prevailing pessimism is unwarranted.
So in a way, they're betting on the market's eventual recovery, believing that this current downturn is an overreaction.
Exactly. They have a long-term perspective, and they believe that the market will eventually correct itself.
That's a powerful reminder that while the market can be volatile in the short term, it has historically, trended upwards over the long run. So even if we are entering a bear market, it's not necessarily a reason to abandon your investment strategy altogether.
Absolutely. In fact, a bear market can be an opportunity to refine your strategy, rebalance your portfolio, and really position yourself for future growth.
So for our listener who might be feeling a little apprehensive about the current market climate, what's the one piece of advice you would leave them with?
I would say stay informed, stay calm, and stay focused on your long-term goals. A bear market can be a challenge, but it's also a chance to learn, adapt, and emerge as a stronger, more savvy investor.
Wise words. A big thank you to our expert for guiding us through this deep dive into market volatility. And to our listener, remember, knowledge is power. And even in the midst of all this market turbulence, there are always opportunities for those who are willing to look for them. Thanks for tuning in. We'll see you next time.